Marilyn.
Okay, so I'm here with Marilyn Fouché, also known as Cakes by Marilyn, if anybody wants to follow her right now, because she got a lot of advice. So this is my bestie, right? And so the whole show idea is that I talk to my besties the way I normally talk to my besties about money. So we're like trying to squeeze this conversation in right before her next Zoom call, quite honestly, because she came by here to work from home. Don't call her job and tell them that though. And so, what are we gonna talk about? What's the money talk for today?
The money talk for today. Well, this is my bestie, and we also align on a lot of things where we talk finances, which may seem a little boring, or some people think talking money should be taboo. But I'm always like, what? Each one teach one. And when we think we know everything about finances, there's always more.
Which is true, because the last time you was over here, I remember on the break, whatever break we were on, I don't know, but you were like checking your phone and you didn't have a Zoom call, and so then you started checking the interest rate on your Ibonds.
Yes.
Exactly, which Ibonds is definitely cool. Those are inflation bonds, which go up and down based on not the inflation rate. They go up and down based on how inflation is doing. So, how are your Ibonds doing, Marilyn?
They are doing fantastic, because normally they're known as junk bonds, right? And something that says junk bonds, you're like, oh, why do you want to? But because the rates were very high, and it's a guaranteed rate, they were at
very high. Yeah, what?
Yeah, 6, close to 7, and prior to that they were at 9. When if you had your money in any savings or checking account, you were getting less than 2%.
Well, look at that. And so what are the Ibonds? Do you know what they are now? I didn't prep you before this, so you might not know.
Yeah, so when I invest, I had just missed the 9%, and they pay out every 6 months. So they were at 6.75.
Okay, but it just went down again, right?
It just went down, yeah. But yeah.
So what is it at now? Like 4%?
No, I don't think it's at 4. I think it's
still 6. Maybe.
Yeah, 6.2 or something like that.
Look it up. Inflation bonds, Ibonds. Check it out.
Yeah.
Because I don't have any, quite honestly, but I am contemplating them, because you can put in up to $10,000, right?
Correct.
And then the rate stays that way for 6 months, and then the government adjusts the rate again based on how inflation is doing. So, I mean, it's definitely a great thing to do, especially now with inflation being so high, with eggs costing $1 million and gas going back through the roof. So hint, hint, inflation bonds are probably doing well as well. So,
and if you need your money to be liquid, you can pull it out at any time. They just won't pay the last 3 months of the interest rate that's in there. So don't ever be afraid of, oh my gosh, I've got to keep it in there for a year or whatever it is. They will let you pull it out. There is no penalty. They just won't pay the last 3 months of that interest rate.
If you pull it out in less than a year. Right.
Less than a year.
Right. Mm-hmm. So, okay, so that's the Ibond conversation. And the next few minutes until your Zoom call, how much we got? 10 minutes, 5 minutes?
We have 10 minutes. Well,
so,
okay.
What?
Well, no, with the each one teach one, I was, housing market, right? Everything is upside down now, right? Cars are appreciating. You could buy a car like my kids did. They bought a used car for $3,000, drove it for a year and a half. COVID happened. Somebody gave them $5,000. I'm like, what? And this was a car with like roll down windows. I'm like, you don't buy a car for $3,000 and sell it for a profit even after you drove it. So housing market, right? Mm-hmm. People are like, oh my gosh, everything's upside down. You gotta outbid the next person. Asking price is this. People are giving a normal market, asking price is this, and you negotiate down. People are giving over asking.
Yes.
And what we
They are. And what you've stumbled upon is what? Give us the nugget. The wisdom of what my friend Marilyn, Cakes by Marilyn.
And as we own homes, right? I thought I knew it all. And I'm like, who are these people coming in making cash offers? Blah, 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 blah. And we have enough equity in our house. If you were downsizing, you probably have enough cash maybe to. Well, no, they're making cash offers because there's a program by Annie Mac.
Right. So cash offer doesn't necessarily mean, oh, I'm just sitting on 500 G's and I'm about to drop 500 G's on this house. Cash offer can also mean,
It's called Cash to Keys by Annie Mac. Which
Annie Mac?
Yeah, Annie Mac.
Oh, Annie Mac, not Fannie or Freddie, because there's a bunch of Macs in that family.
Right.
Okay,
right.
Annie Mac got the Cash to Keys.
Cash to Keys.
Tell me about it, honey. Tell me about it.
And so they will underwrite you, right? Because you can come in saying, hey, I'm strong with your financial person. that you're underwritten and you're good for whatever the mortgage price that you're trying to buy a house for. But they will then give you a letter that says, hey, it's a cash offer, because they will upfront the
so
cash.
if your credit is really good. Do you have
Yeah,
good
exactly,
credit
and that's the thing.
What do your
Yes,
credit
yes.
needs to be, like 700 plus-ish?
I would think so. Yeah.
Right.
Yeah. And they're gonna
Which is
interview you,
good,
and you've
though.
got to show them how much you're liquid and what.
But you don't have to be as liquid as the house price.
As the house price, exactly.
But they will make you as liquid as the house price.
Yes.
Is that what happens?
Yes. That's
So do
the
you
addendum.
still get a mortgage though? You still have to pay them back every month.
Mm-hmm. You still do get.
Do they actually? Because somebody told me about like that you could do it with cars sometimes, and the mortgage company, well not the mortgage company, but the financing company would give you the money cash. You put it in your bank account, and then when you go buy the car, you're actually buying the car from your bank account. So it's not actually like against the car. So does it go that way? Do you get all the money in your bank? Do you get $500,000 in your bank account, and then you could go buy the house or not?
Well, no. So it's in between, kind of like how you're going to get vetted for a mortgage, so on and so forth. And if you need to close in a particular amount of time, or it just makes your buying power to kind of squeeze out that other person in this competitive market, because if they see, hey, here's a cash offer where someone is going to go through a mortgage, sometimes they really don't know if that buyer then will get vetted through their mortgage, and things have failed, and all of a sudden they didn't make the mortgage.
Got
and
you.
you lost out on that person that Annie Mac was just going to give you the cash, and we'll deal with making sure this person gets a
So if you get
mortgage.
approved for the cash to keys, then you're pretty much seen as a more strong buyer to whoever you're buying it from. But technically you are still getting a mortgage.
Yes.
You don't have to have the cash available. Okay. Which I love that nugget. And before you get back on your Zoom call, you got to talk about this. And I see you didn't bring the spreadsheets.
Oh my gosh,
We were joking
no,
about this. We were joking about this. I'm going to try to post spreadsheets somewhere on my website for you guys.
So I knew you were going to say
So
that.
all right, everybody, you know I was going to bring this conversation up, so you have your laptop. I'm so happy about this. So
I can't believe you.
stand by for this. So now this right here, everybody can do this. I don't care how much money you have. I don't care whether you got money for a house. I don't care if you have money to invest in Ibonds. This tip right here,
I can't believe
this tip right
I can't
here,
believe you're making me do this.
this is for everybody. Okay, this is for everybody. 17-year-olds, no 18. I think got to be at least 18 for this trick. But that's all you got to be. So what Marilyn does, I'm gonna tell y'all really short, and I'm gonna let her fill in the details on it. You know how you get these offers in the mail, and they say, you know, open a bank account with us, and we'll give you $250. And sometimes they have some conditions, and they might say you have to keep it here for 6 months, or you know, you have to have a direct deposit with us, and we'll give you $250 just for opening the account, kind of thing. This friend of mine, this BFF right here, she got that mess mastered. She got that mess mastered.
Yeah, you can.
You see this? Y'all can't see this, but I'm gonna tell you, this is a spreadsheet. So tell me what you be doing. What you be doing?
Oh, because right, I'm on a computer all day long. I was like, and people are like, oh, but it takes so long to open up a bank account. No, you don't. You can open up these accounts online. It takes 5 minutes.
And how much money did you make just last year? I see on this spreadsheet doing this.
Just last year, I made $2,230. Took their bonus, closed out the account, move on to the next one. And some of these bankers know this, right? Because they've looked at me like, oh, do you want us to get you an ATM card? No, because I'm not going to be here long. Oh, do you want us to get you a checkbook? No, not going to be here that long. Do you want statements? No, because after the time limit is over, I'm out of here. And they can tell, right? Like, I'm in a hurry. And they do let you know that you can come back and do it again after a year. That's the normal. So
that you can get
so
it
you
again.
can get it again, right? Because then you're considered a new customer.
Right, and
after
I'm looking at the spreadsheet. I'm telling y'all her business. So she made $2,230 last year just in opening accounts. How many accounts did you open last year to get that money?
Last year I had opened up Wells Fargo, TD Bank, and Citibank, and Capital One. So
that was like 5 accounts.
Yes,
you made the
$5
$2,200.
And
so give us an example. Tell them an example of how much you was making off one.
And as you can see, Wells Fargo, I did it again. They're like, yeah, come on back. So and the promotion.
Okay, because as of now, for this year, she made $2,230 last year, and so far she's made $900
this year.
For this year, in the 6 months of this year. So she headed for it again. But give us an example now. So tell us about one of the big cash outs.
The big cash outs. The biggest cash out was actually Citibank. This one was a little harder. Well, you can still do it online, but Citibank kind of, I think, only really exists in the city. And that was one where, oh my gosh, you're gonna make me go to the spreadsheet, where their biggest payout was $680.
And what did you have to do?
So I just had to open up a checking account, keep it in there, and now they're not even doing 6 months. Within 3 months, they will give you the bonus. And as soon as the bonus is paid, you can close it out. So they tell you to keep it open so they can give you the bonus. So the checking account paid $300. All you needed was a direct deposit. And I think the direct deposit was at least $1,000 for the month.
Okay. And so you just went in your employer's database or whatever and just allocated your direct deposit to go there. So did all your money start going to that bank?
Very good question. That's how I take advantage and can do this bonus thing simultaneously or concurrently, because you can split your checks up, at least with my employer, into 3 different bank accounts. So I would throw $1,000 in here, and then another one just needed $500 to go in once a month. So I put $500 in there, and then what the balance was, that would go into a third account. So I'm doing all.
So you're not putting your whole paycheck. You're not like, oh, I get paid $1,000 this week. Now it's all going to Citizen this week. You just allocate. Okay, we'll put $300 in Citizen, whatever that requirement is for the amount of months it's required, and you just let it sit there, and then you actually close the account at the end
after the bonus is paid. So let's get back to Citibank. That was the biggest payout, right? Checking paid $300, a savings paid $100, and then if you opened up a credit card, they were like, we'll give you $280.
And you opened the credit card
too. I opened up a credit card,
and that didn't affect your credit at all.
Well, here's the thing about credit, as you and I have spoken about, right? No one wears their credit score on a t-shirt, right? I don't care. I'll divulge mine, right? 804. So
yes,
so
800 club in these streets. Go ahead.
But who cares, right? It's not on my forehead. It's not on my t-shirt. The only time you're ever going to utilize credit is what? When you're making a big purchase, either your home or your car. After that, it might take a little dip because you've opened up a credit card, but it increases after that. But, I wouldn't suggest it unless you are a very responsible person with
very
credit
disciplined
cards.
And like got spreadsheets and stuff to keep track of what you're doing with your stuff.
So opened up the credit card, they're like, hey, if you spend $500, we'll give you $200 or $280, whatever it is. So basically I got $200 worth of stuff that I would have been paying for, whether it's my
and
light
do you
bill,
keep balances on that credit card?
And no, I don't. So as soon as I get the bonus, boop, close out the card.
You close the credit cards too. Now that's gotta be careful with that. You can do that with the new cards because you have old cards because you want longevity on your credit cards. So you want to have at least 1 or 2 cards that you've had for forever. But these new cards that you open and close, like Marilyn said, as long as you don't keep a balance on them, and it actually helps too. Remember that other part we talk about, that you get a credit card and it gives you a $5,000 limit, and you only got to spend $250 or $500 on it. You now have that balance. That 4,000 plus is showing your credit worthiness that you're being disciplined enough to not use. So it actually helps you by having more limits available. So that's wonderful. Oh my God. Okay, and I know that you got to get ready to go to the Zoom call.
Oh, no, you bring up a very good point with longevity, right? So my main card is an American Express. I've had it since college. I'm almost hitting that 25-year mark because that's what puts you in the A+ kind of category. And I'm like, 25 years. That's a quarter of a century. Not many people can say that. I'm finally almost getting there. And so these are the ones you can either keep them, close them, just be disciplined, freeze them, right? You can freeze them so they're not used. And it just increases your credit ratio higher. So your debt to credit ratio looks excellent, right? Ask your credit cards to increase your limit. Doesn't mean you're going to go spend it. But if you're spending $1,000, but your limit is $60,000, because I have $60,000 on my credit card, but I don't need
keeping it rich with Sakina, baby. I'm trying to tell you,
then it looks like it's less than 5%. Exactly, the debt to credit ratio. So that's how your debt to credit ratio will look low.
Which is great. So she still manages to have this 800 plus credit score, which I also, was a member of the 800 Club. As we say, it manages, it goes up and down. I'm not in the 800 Club now, but I can also post for you how I made it there. I actually did an article on myself in Essence when I hit the 800 Club. And I'll, share same kind of stuff, what I did to go up and down. But so So therefore, that's why I trust bringing her in here to talk to you and explaining to you about this spreadsheet thing. So I'm peeping at the spreadsheet. Some of these accounts you had to put, so in Citibank, you had to put in $15,000. So everybody doesn't just have $15,000 sitting in the account saying, hey, let me just go put that in there so I can make 680. But if you do, you should. But in there, I think in your spreadsheet, I saw some lower amounts too. So talk to me about like what happened at Citizens.
Right. So that was back in 2022. Now the bonuses, banks are getting a little more aggressive because they know they're not competing with interest rates. So they just want people to come in. So now they're not even asking for those large amounts. Citizen just said $200 a month into a savings for only 3 months. And then a $500 direct deposit. Only going in one time.
And of course, yours only went one time. You ain't
so for $700, they're gonna give me a bonus of $600. Wells Fargo has a promotional going on right now, and that's $1,000 monthly. And I opened it up in March, and in July, again within 3 months, they're gonna pay out.
You put $1,000 every month. You said it was $1,000.
As long as you make a direct deposit, right? And it doesn't mean you have to hold it there, right? Because it's a checking account, so you are gonna use it to pay bills. So let it go in there, transfer it back into your main account. They could care less if the $1,000 hit today and you transfer it back out to your other financial institution.
Gotcha. And then after the 3 months, you take the money and put it back in your main bank account. This right here. This is everything. Well, I am so happy to have Marilyn Fouché, Cakes by Marilyn on Instagram. And I am Sakina. I am Keeping It Rich on Instagram. And you are all Keeping It Rich with Sakina. And I thank my guest, Marilyn, for showing up today. I hope you all got some good tips. And in the meantime, do remember, keep keeping it rich. Bye.
Switches.